Hello, Roger. How are you today?
You started laughing already. You only said hello, Roger, and that's it.
So today's topic, we're going to be talking about interest rates.
Okay.
So there's a bit of what I was having a look through the news, and I believe there's a bit of an interest rate showdown when it comes to mortgage loans at the moment. What would you say?
Yeah, yes, is the answer to that. Is that competition drives rates down, but there has to be a point that then there's no return. And what I mean by that is that when rates start dropping below 1%, then people are just going for market share, and the actual lender, whether your heart bleeds them or not, is irrelevant for this conversation. But they can't make a return, so they go bust. That's it.
And for the people that are obviously watching at home and who are actually interested in the rates, what's the lowest rate that's available at the moment?
But they're coming in at sub 1%, which is historically absolutely brilliant, from that alone, But most people should be paying sub 2%, making an assumption that the mortgage is below around about sort of 75% loan to value, i.e. the debt against the house value.
Would you say taking the lowest rate in a fixed deal is the best deal? Because I think sometimes they can be used as a little bit of a deviation tactic when it comes to all the other things that have got to be taken into consideration.
I think, like all those things, that's where it's an advice-driven process, and that's why you should be seeking the expert advice of a mortgage advisor, because they'll get you to actually think about things perhaps you haven't thought about. There is this perception in the world, in the marketplace, that if you've got a mortgage, it's portable. You can just phone your lender and say, I'm moving to this house to come put my mortgage. Yes, you will. It doesn't work like that. It's a new application, new criteria, and you might fall foul of the actual new criteria anyway.
Okay, so the best thing is to come and speak to you, isn't it?
It is a mortgage advisor, absolutely.
Yeah. Okay, and just to remind everyone, you don't charge fees for your advice, do you?
99.9% of the time we don't, unless of course somebody wants a very complex scenario which actually takes their time away from our mainstream. Then we do reserve the right to charge a fee then.
Okay, so skipping past that subject and moving on to credit scores, which is quite an interesting topic, actually. Do you think there are actually sort of tricks in the trade that are used to kind of incentivize people and then decentivize? I mean, is there like a strict, like, do things always stay the same? Are they always on a level field, or is it kind of forever changing, especially in this market?
Okay, well, credit score is a really interesting thing. So credit score is actually a system, obviously, a lender uses to assess each application. And most people think that credit scores stay the same. They don't, they change. And they actually effectively are very similar to a lock gate on a canal. They can actually stem the flow of applications in and out. So if a lender is behind target, then they'll lower the credit score. If they've got too much business in there, it's increase the credit score. So what we're really saying is that if you applied, say, 3 months ago and you were turned down, because there's more competition out there now, it's obviously worthwhile just double checking and reapplying again. What I would say is that go to a lender which does a soft footprint, not a hard footprint, and the soft footprint has no effect on your credit file at all.
It's really interesting, actually, that, because I know people that try to apply for a mortgage about a year ago, and then they're convinced that because they've had bad credit rating, that they don't think they're actually going to be able to get one still. So you would say, actually, 3 months can even make a difference if you try to reapply.
Yeah, absolutely. The only thing I would say is that it's not just bad credit which gets you declined. There's other factors such as not being found. So if you're not on the voters roll, you don't have a telephone, it can be detrimental. Also, having too much debt in relative to your income is also a no-no with some lenders, not with all lenders. And when you've also got a situation that you say you're going to pay some of your credit back, some lenders don't believe you.
Okay, so can we just do sort of a bit of top tips when it comes to credit history then? I mean, obviously I know mortgages are your field, but do you have any advice over what to do to improve your credit score?
Yeah, I mean, your answer to that is that look at your outgoings. Okay, that's an easy bit, but people would say, well, I do that already. But actually, you've got to look at what you can pay off and what you can actually reduce and what you can actually shut. So
Hmm.
if you've got credit cards with a zero balance and say a £10,000 limit on it, as far as the lender's concerned, you could go out tomorrow and actually spend £10,000 worth of credit, which obviously then is detrimental to the mortgage. So you
Hmm.
might want to reduce that limit or actually close that card down if you're not actually using it.
Okay, and then if we just go back to the subject about interest rates, your to sort of sum it up, you would say that, in terms, don't be kind of dazzled by the lights of lower interest rates, and actually seek professional advice.
Absolutely, because what you've actually got, you've got really two camps out there. You've got advised sales and non-advised sales.
Yeah.
Okay, and advised sales where someone's going to sit down, listen to what your requirements are, what you're actually after, and then
Hmm.
make a sort of a recommendation based on that conversation. A non-advised sale is not you just making a stab in the dark thinking it's going to be okay, but people give you the facts for you to actually make a decision. Now, some people are comfortable doing that, others may not be, and you're
Hmm.
talking about your largest house and your largest commitment. So
Yeah, yeah.
we only do advised sales, and that's really what I'm actually saying people should be looking at, because the job of the mortgage advisor is not just to actually listen, to take on board, but to also actually prompt questions perhaps you haven't thought of, and that's really key.
So, Roger, what would you say is the best term for the mortgage to be over? Would you say to fix it for 2 years or fix it for 5 years? What would you say?
Okay, so let's look at that. That's a really interesting question. I've got my own opinion that anybody who's moving to their first property or to the next home, they should only ever take a 2-year deal. Okay, they
Right.
shouldn't take a longer term deal. Really, the reason behind that is that you're actually entering into something you don't know. You don't know how the neighbours are going to be. You don't know
Mm-hmm.
whether you're going to be able to commute backwards and forwards. You don't know what the school's going to be like, and maybe it could be wrong for you. You know, and so if you take a 5-year deal, then you actually lock yourself in for 5 years. Yes, you can come out of it, but you pay a penalty. Yes, it's
Mm-hmm.
possible, but you have to meet the lender's requirements, which could have changed.
Mm.
So 2 years
Yeah.
gives you the flexibility to obviously chop and change.
So really, the incentives over the 5 years. Why would someone go for the 5 year rather than the 2 year? Just in terms of the actual
So,
rate itself.
so a 5-year, you might have long-term stability. You might have a situation that your personal circumstances mean you could be starting a family.
Mm-hmm.
You love the house. You've got no intentions of moving. Okay, your children are in schooling. You want stability, which tends to come to all of us. Okay, and
In the
once
end.
you have that, then you might well turn around and decide that taking a lower interest rate, knowing where your payments for the next 5 years,
Mm-hmm.
helps you budget and actually manage your money accordingly. So it makes perfect sense in that situation, but not when you're just actually starting out on a trip.
Yeah, yeah, yeah. Sure, that makes a lot of sense. And I think that's something that people don't always take into consideration, do they? And then they tend to feel sort of locked into their mortgages, like locked into a contract. I mean, what advice would you give to any people out there who actually feel sort of trapped in their mortgage?
Well, the answer to all those things is that you're only trapped if you don't reach out, and that's very
Mm,
very much the key point to it. You don't have to pay for advice. Somebody within 10 minutes can tell you what you can do,
mm-hmm,
help you and assist you. So why would you not ask those questions?
mm.
It's just a question that people are so scared and so conscious about the mortgage that they feel that they're actually divulging almost in the darkness. It's not. Mortgages are a lot more transparent, honest, and open than they were before, and it's only your own negativity stopping you from moving forward on it.
Yeah, it's funny, isn't it? Because we question, if your phone bill it goes up, then you question it, or if the cost of your contract with your mobile provider goes up, you question it, don't you? Like car insurance. So it's
Well, look at the last time you bought an item from a shop and it actually failed to meet your expectations. You soon take
mm,
it back and get a refund.
mhm.
Yeah, your mortgage can be too expensive. It might not be what you want, but you don't ask the questions on it. Why?
Yeah, it's a very good point.
You
Very
know?
good point.
So, I mean, if you look at something else we're working alongside, over 48% of the UK population are currently paying a lender standard rate. That's around about 4%, and that's outrageous. If
Mhm.
I actually said to you, I'll give you a £300 a month pay rise, you pop my hand off. And that's probably
Yep.
what you're paying extra on your mortgage per month.
Yeah. Yeah. No, that's fantastic advice. Thank you so much, Roger, as ever. It's
That's all right.
wonderful to talk to you.
Indeed. No worries. Take care.
Bye bye.
Bye.